In 1835, Andrew Jackson paid off the entire national debt of the United States. 0. The only time in American history. Within 2 years, debt began accumulating again, and the system installed in 1913 was specifically designed to make that zero condition permanently impossible. The Federal Reserve Act and the 16th Amendment was signed in the same calendar year by overlapping networks of people, and they cannot function without each other. The income tax services the debt that the Federal Reserve creates by purchasing it. The loop was closed deliberately, and it has never been reopened. Let me give you a number. In 1790, the United States federal government had a national debt of approximately $75 million, the legacy of the Revolutionary War. By 1835, President Andrew Jackson had paid off the national debt entirely. The debt was zero. The United States federal government, for the only time in its history, owed nothing to anyone. Within 2 years, through the economic disruptions of the Panic of 1837, debt began to accumulate again. But for a brief moment, in 1835, the debt was zero. And, at that moment, the system that was subsequently installed in 1913 to manage national debt as a permanent condition of governance did not yet exist. There was nothing to manage. The debt was gone. And the question that this moment raises, a question that no mainstream economic history has ever satisfactorily answered, is, why didn't it stay gone? Not why did debt accumulate again after 1837, which is a specific historical question with specific historical answers involving land speculation, currency contraction, and international credit flows. Why is federal debt now considered a permanent and necessary feature of governance, rather than a temporary condition to be eliminated, as Jackson eliminated it? Why has the post-1913 economic system been designed around the permanent maintenance of federal debt rather than its elimination? What changed in 1913 that made permanent debt not just acceptable, but structurally necessary? The answer is the Federal Reserve. Not as a conspiracy. As a mechanical fact of how the modern monetary system works, the Federal Reserve creates the majority of the currency in circulation by purchasing government debt. When the government needs money, it issues treasury bonds. The Federal Reserve buys those bonds, crediting the government's account with new money. The money is created. The bonds are now an asset of the Federal Reserve, and the bonds carry interest. The government must pay interest on the bonds it issued to generate the money it spent. The interest payments require revenue. The revenue requires taxation. And the taxation requires a mechanism for collecting it from the population. The mechanism installed in 1913 is the 16th Amendment, the income tax. This is the closed loop I mentioned at the outset. The Federal Reserve creates money by buying government debt. The government must pay interest on that debt. The income tax provides the revenue to pay the interest. The income tax requires the population to earn money in order to pay tax on it. Earning money requires working. Working requires reporting to a location at scheduled times. Reporting to a location at scheduled times requires the standardized time system that was installed in 1884. Every element of the loop depends on every other element. The standardized clock makes industrial labor schedulable. Industrial labor produces income. The income tax captures a portion of that income for the state. The state uses that captured income to service the debt on which the Federal Reserve created the money in the first place. The loop is complete, self-reinforcing. and designed so that no single element can be removed without collapsing the whole system. What does this have to do with Tartaria? Everything. Because the system I've just described is not the only possible system. It is not the natural outcome of economic development. It is a specific design, installed at specific historical moments, replacing a prior system that operated on different principles. And the prior system, whatever its specific form, was the economic foundation of the civilization that the maps called Tartaria. A civilization that, as I've described in earlier investigations, featured free public infrastructure, non-debt currency, universal provision of basic goods, and economic relationships that did not require the population to sell their labor to survive. The Jackson moment, the zero-debt moment of 1835, is the closest the post-reset economic order came to recovering the non-debt operating principle of the prior system. And the institutional response to that moment was the construction of a system, completed in 1913, that made the zero-debt condition permanently impossible. Not by force, not by decree, by architecture, by building an economic system whose internal logic requires permanent debt as its operating condition. A system that cannot function, technically, without a continuously growing money supply, and a continuously growing money supply requires a continuously growing debt, and a continuously growing debt requires a continuously growing economy, and a continuously growing economy requires a continuously expanding population of working taxpayers who are economically obligated to remain within the system. Let me trace the specific decisions of 1913 more carefully, because the simultaneity matters. The 16th Amendment was ratified on February 3, 1913. The Federal Reserve Act was signed on December 23, 1913. 10 months apart, in the same calendar year. The advocates for both pieces of legislation were in many cases the same people, working in the same circles, operating from the same analysis of what the American economic system needed. The standard historical narrative presents this as a coincidence of progressive reform. The income tax was a progressive measure to shift the tax burden toward the wealthy. And the Federal Reserve was a banking reform measure to stabilize the currency and prevent panics. Both narratives are partially accurate. Both omit the structural relationship between the two measures. The Federal Reserve needs a debt market to operate. It needs the government to issue bonds. A government that issues bonds must service them. Service requires revenue. Revenue requires a reliable collection mechanism. The income tax is that mechanism. The Federal Reserve could not function, as designed, without the 16th Amendment. The 16th Amendment's revenue was not economically significant without the Federal Reserve's money creation, because a government that doesn't borrow doesn't need the tax revenue to service debt. The two measures are not separately justified reforms. They are interlocking components of a single system. They were installed together because they could not function separately. Who designed this system? The historical record of the negotiations that produced both the Federal Reserve Act and the 16th Amendment points to a specific network of financial and political figures operating in the same intellectual context, drawing on the same analysis of what the American economic system should become. The Jekyll Island meeting of November 1910, where the basic design of the Federal Reserve was worked out by a group of bankers and politicians meeting in secret, is documented history. Not conspiracy theory, documented. The participants later acknowledged it. The design that emerged from that meeting became the Federal Reserve Act 3 years later. What the Jekyll Island participants understood What the architects of the 1913 system understood was that the zero debt condition was a permanent threat to the financial system they were building. Not because a government with no debt is economically dysfunctional, which it is not, but because a government with no debt has no mechanism to create money through the bond purchase channel. A government with no debt and no Federal Reserve must create money directly without the intermediary of a central bank purchasing debt. And money created directly without the debt mechanism is money without a corresponding obligation. It is the kind of money that the pre-reset civilization appeared to use. Money that represents value rather than obligation. Money that doesn't require compound interest to circulate. Money that could fund free public infrastructure without creating the economic dependency that the post-reset administrative order required. The 1913 system was designed to prevent that, to make it structurally impossible for the economy to operate without the debt mechanism, to create a permanent condition of national obligation that required the income tax to service and the working population to fund, to close the loop between money creation, debt, taxation, labor, scheduling, and the standardized clock system, to produce, at the end of the loop, a population that must work, must earn, must pay, must remain within the system because the system has been designed so that there is no outside of it, no free water to drink, no free energy to use, no free month to count, no free economy to participate in, just the loop. Permanent, self-reinforcing, and installed in 1913 with the precision of a mechanism whose designers knew exactly what they were building and exactly what they were replacing. The debt is at $33 trillion now. It will not be paid off. Not because the economy is insufficiently productive, because the payment of the debt would collapse the money supply. The debt is the money. They are the same thing. And the thing they replaced, the economic system that ran without debt, that provided public goods without obligation, that funded infrastructure without creating permanent indebtedness in the populations that used it, is the system that was operating in the cities, the maps labeled as Tartaria. Before the reset, before the archives burned, before the maps were redrawn, before 1913 closed the loop permanently and made the zero-debt condition not just historical, but genuinely unimaginable to the populations living within the system it built. If the 1913 system was designed not just as banking reform, but as the structural completion of a reset that made free public infrastructure permanently impossible, closing the loop between debt, taxation, labor, and standardized time, what would have to change for the loop to open again, and who would resist that most? Leave your thoughts below, and share this if you think 1913 was the year the reset was finalized.